Welcome, team.
All right. We're live, Zach.
We're live, and we're live. It's Tuesday at Startup TNT. Some of you are joining us on Zoom, some of you joining us on YouTube. We are here with Brendan Hance and Tim Lim, our friends at Startup TNT and from 4th Street Capital and Consulting. We're talking shop, we're talking due diligence, we're unpacking the due diligence process for the community here as we get ready for the next Startup TNT Investment Summit. Applications are open. I know many of you on the call have already applied. 32 people have applied so far. Would like to see at least 60 applied, preferably 80. We'll see where we get to by next Monday. That's the application deadline. We got about 40 investors confirmed now. Going to probably kick that up to about 60 by the end of the month. I'm really excited about it. When we did this in the fall, guys, we raised $1.1 million for 5 companies, all from Alberta. Would love to see us top that number in the spring. And part of the thing that we hear, part of the feedback we hear from all the entrepreneurs that participate is like building the data room is this really, really valuable aspect of the entire process. And we would love as entrepreneurs to have a little bit better understanding of what it's like to actually build a data room, how to better prepare for that process, because it can be a little bit of a daunting task. So I got 2 guests here with us today that have helped us organize these summits, helped us launch Startup TNT, invested with us in the summits, and as a full-time job, they work as contract CFOs, consultants, help people raise money. So Tim and Brendan, welcome aboard. Say hello.
Thanks, Zach. Wow, this is fun. Let's keep the conversation going like we did last week.
Yeah. Okay. So just remind everybody who maybe missed a little bit about your background. What do you guys do at 4th Street Consulting and Capital?
Yeah. The super long and short of it is I've got a background. I was part of a startup that successfully exited, and then I worked at Deloitte helping other people sell their businesses and raise money. And then now, besides being, like I said last week, I'm got sitting in between both of my co-founders here. I got Zack, the co-founder of Startup TNT, and then Brendan, the co-founder of 4th Street, where we help startups and traditional companies, both on the startup side, largely around raising money and how to deal with once you have some real money that's sitting on the cap table, like VCs help with reporting and getting the business, nice and sophisticated and what you're supposed to do with 7 figures of cash once it gets plunked into the bank account. But like we're talking about here, mostly around helping people get ready to raise money, around the strategy about it, around how to run the process, around what these investors need to see, around how to position, all of the fun things that need to be done in order to try and convince people to plunk their hard-earned cash into your company.
Yeah. Okay. Awesome, Tim. I can say that a lot of people that I thought were more sophisticated than me asked Tim for advice all the time in terms of how to structure a deal, where to go to, and a common reframe I hear is that guy Tim. He's really smart, but he's also very young. So don't tell him I said that. I've heard a few people say that. Give him a big head. Brendan, you have experience with both retail, traditional businesses, and some fast growth startups here in Edmonton. Tell us a little bit about your background and what you do.
Yeah. So I spent the better part of, I don't know, probably half a decade working for a family business, and we were fortunate enough in 2017 to sell it. So I went through the due diligence process on the sell side as a quasi business owner. My dad was the primary owner, but I acted for a family, and so yeah, that was a really eye-opening experience into the world of due diligence and what's required of you when you're ready to sell a company. And then after that, I was fortunate enough to join G2V Optics right around their first raise, and as their quasi CFO. And so I've spent the last 2 years working very closely with them, in addition to a whole bunch of other companies here in Edmonton doing some consulting work. So I have a bunch of experience around like capital raising and sell side and a little bit of buy side as well.
Can you guys, I'm just going to, in the world of capital markets, this is slightly off topic from today, but what is buy side versus sell side? I hear the gurus talk about this all the time, and I'll admit, I actually have no idea what it means. I've just never told you that.
There's 2 sides to a transaction. There's a buyer and a seller. The buy side is representing the side of the buyer, and the sell side is representing the side of the seller, whether that's the buyer themselves or,
or an investor,
the broker, any sort of intermediary, lawyer, advisor, accountant, all of the crew. There's a team that's on each side. buy side and sell side.
And do people specialists? Do you guys specialize as a consultant or a PE? Like I specialize for the buyer versus the sellers.
I'm historically I've pretty much only been on the sell side. Whether that's with the startup that I was with, whether that's when we were helping companies sell in the traditional mid-market, whether it's helping startups sell their equity, that also counts as sell side. But the other part of our life that we're in, and I've done a little bit of buy side stuff. We helped acquire a nursing home back when I was at Deloitte. But our private equity side, we're looking to be the buyers of traditional businesses. And so we're acting as the buy side, and we're looking through that lens on a pretty regular basis now as well.
Yeah. And anytime you make an investment, you would be considered a buy side. Be considered buy side. So this type of stuff, if you're an investor, you would be doing buy side due diligence.
The investment team is doing buy side due diligence to invest $150,000+ into one of the companies. Hopefully more.
Hopefully more.
Hopefully more. So guys, let's get into it. Like what do we need to know? The last time we were here, we talked a little bit about like what is the point of due diligence? What are we trying to learn? Kind of like that initial coffee meeting. We're just kind of getting to know the founder. And then we said, okay, well, if you really want to open the door and look at the company needs to have what we call a data room, and the investors go in and take a closer look at it. So really like to spend today's meeting unpacking what goes into that data room and kind of the best way to structure it. So the buyer is excited about your company and wants to make that purchase.
Yeah, sounds good.
I think that's probably the most important point. Is it's less of like, I think that Zack, you're going to show the big checklist that we tend to run with. But the point of the data room isn't to have, a whole bunch of boxes checked off. It's to make sure that that you're trying to convince the buy side that you're a really good, solid investment, that you have all your ducks in a row, that they're, able to check all of their boxes more than checking it's not the sell side trying to check their own boxes. It's trying to think of what the buy side needs to check off in order to be able to write the check and make that happen. And I think that keeping that lens on is really important when going through the due diligence process on the sell side.
And I think there's probably an offshoot of that, which is also really important, is a couple things. One, it shows that you're organized and you've been thoughtful in your approach. And two, it actually helps you get organized. We haven't thought about an ESOP before. Maybe it's something that we should be prepared to answer a question about. But I think it helps you as an owner or as a founder to start thinking about important corporate documents, important aspects of your business, and make sure they're organized in advance of going out to raise money.
Okay, guys, you know what? I'm gonna mix it up here. I'm gonna do something that I didn't tell you I was gonna do. I'm gonna share. Are you guys seeing this?
I see a small Finder window or an Explorer window.
I'm not doing the share properly.
We see a little sample data room.
Do you see a little sample data room?
Sure do.
Is it big enough? Can you see it?
Oh yeah, it's super big.
That's good.
So guys, here's a little sample data room I just threw together based on my experience at Startup TNT, what I've seen other people do. Why don't we just start by you guys telling me, does this look like a well-organized data room? Anything jumping out at you? Like this guy looks like he knows what he's doing. He's missing something. I can tell you if we open any of the folders, they're all blank, but
yeah, I mean,
so let's not dig too deep.
I mean, from the perspective of how to organize a folder right off the bat, I would say that this looks pretty good. Having seen it for, as Brandon says, you've got some kerning and spacing issues, but I think broadly this is helpful, as opposed to like I've seen data rooms where it's like 30 documents that have irrelevant names with like numbers and crap in it, and you're like, I don't want to actually open all of these documents. This is ridiculous. But having folders like this is super helpful. And when looking at a data room, I would say this is what I would expect when initially opening a data room.
Yeah, definitely.
Okay. Any folders jump out at you as like unexpected?
I mean, the beer is obviously. We got to dig into that one a little bit.
Got to dig into that beer folder.
Yeah. The other thing that I would, when we put together this stuff, is we typically have like a high level spreadsheet that lists all the folders and what what makes up the documents that are in those folders. And so I think maybe, you could present.
Is this the spreadsheet you're referring to, Brendan? Yeah,
Sure
keep
is.
going. Walk us through the spreadsheet you guys use. How you use it, how it's organized. Tell us a little bit about this spreadsheet.
Yeah, so this is our sort of standard BDR template for a startup company. If you were a more mature business, this might look more robust or bigger, or there'd be more documents requested. But for the most part, this is like a pretty standard document checklist of items that you'd want to have in a data room. And so, obviously this is how we would organize it in folders. And then we have like subfolders. So, financial would be like the broad folder. And then underneath it, it would have like annual financial statements. And we would label them like 2.1 annual financial statements for X year. And making sure that it's like nice and organized so that anybody who comes into your data room, it's very obvious where everything is located. And then this VDR template would sit sort of like just underneath all of those folders so that you can just go in and I can look at this VDR and be like, yeah, it's in the data room and here's the location of it. And so it makes it very obvious for a user that I can just go in and find that information without having to like dig through a whole bunch of areas in the data room. So.
All right, Brendan, I want to ask you a few rapid fire questions, and you and Tim can just kind of answer offhand. Or Tim, did you want to add something to this before I do that?
I was going to add that it's helpful to provide a document that's similar to this as well, in addition to just the folder, like this as sort of like an index or a table of contents or whatever, so that investors don't have to like pound through each of the folders to find out what's going on. You can just look at this thing, a menu, if you will.
They can do a quick audit to see like how you've organized it and how it compares to what they're expecting to see, and they can know right away if anything's missing.
And I guess there'd also be, I think we were talking about this a little earlier, Tim and I, that this would be like a very fulsome data room. This would be one that you would open up to investors that are keenly interested. And there's another consideration that many people might want to make, that you would likely have a light version of the data room that would include a handful of documents, like your investor presentation and maybe your financial model, some of the stuff maybe in the overview section, and maybe some of the things in like the financial section. But you don't necessarily have to provide everything to every potential investor right off the bat. You could open up like what we did at G2Vs. We had a light data room that had maybe a half a dozen important documents, the proposed investment documents, the forecast, the investor presentation, some financial statements. And then after that, if someone came back and was like, yeah, we were keenly interested in doing this, then we'd open up the full like data room for folks to look at.
Yeah. Okay. Awesome. So let's get into these questions. These are great points. So the way I interpreted what you said is you could potentially use that overview folder as maybe the light door into the bigger data room. And as a first step with an investor, you just show them the overview. And I think like, kind of both sides are doing due diligence here. Like you as an entrepreneur want to make sure that you're sharing your data, which is private to you, with people that you trust. And so you might not want to just open the book to any old person that asks. And so that's like,
yeah. And you might want to have, this is more of a legal question, but you might want to have folks sign a confidentiality or an NDA, after they've committed to, yes, I'm interested in moving down the path of like investing in your business. Then they sign an NDA, and then you can open up the more fulsome room. But yeah, my experience has been largely like you have a light version of it that you can send sort of prospective people that are interested in, you've pitched at some event and someone pings you and says, you know what, I'm interested in learning a little bit more about what you're doing. Then you can send them the light version. And, if they come back and they have a number of questions, then you can send them the more comprehensive due diligence folder after they've expressed some interest or signed an NDA of some sort.
Yeah. I mean, we can get into the topic of NDAs. I firmly against them on the startup side of things. Unless I think the only topic where it's relevant is if, there's like highly sensitive customer information, where they preclude you from being able to share what those customers are, unless it's under NDA, or if it's what's it called, like unprotected IP, like where you haven't filed a patent or a provisional yet. because then it's considered prior art. But I think otherwise, you don't quite need an NDA. But all that said, I think 95% of the information that's in here, other than kind of that IP section and maybe some specific customer information, you could almost have like a only under NDA type folder, and then everything else could probably be open to folks that have expressed like sort of a soft circle interest.
Yeah. I mean, I say NDA, but like it could be NDA or like you have a level of trust with that person, either or.
Okay, guys, let's go through this. If questions are going through the chat, I can't monitor the chat questions very effectively. So you guys,
I can.
Okay. So tell us a little about the overview here. You have investor presentation. How detailed investor presentation are you looking at? Is this like a 5-point, 10-point, 20-point slide presentation? Like, what are you guys looking at here?
I think it's typically the one that you use to pitch, but it could also be one that you have like some more appendix slides in or with some more information. And Tim might have some thoughts on this as well.
Yeah, I mean, especially for a startup, and for the audience that we're talking to, it's the same deck that you've used when you made the initial pitch. To Brendan's point, with some appendices or some more details,
backup slides.
Yeah.
Okay, and what about the forecast model you have in there? What is the forecast model here compared to like the detailed financial model you might have in the second tier?
I think that this is it.
This is the one, yeah.
This is it. So it's the same one. Okay.
Yeah, I think that, I mean, there isn't really a whole lot of confidential information that's happening in that model. If somebody can glean your business plan off of a financial model, they probably have other things to do besides try and start a company that'll compete with a seed stage startup. So I don't think that there's any like huge confidential things that'll be in a financial model.
And any guidelines for us is when we how detailed the financial model should be? I asked because for one company, I remember opening up their financial model and there was like, I don't know, 100 tabs, and I honestly got lost. It was so incredibly detailed. I think the founder actually couldn't even explain it to me. It was incredibly detailed. So
yeah, we could probably spend a whole meeting just talking about it, but I think at a high level, understanding, making it very obvious like what the drivers of the business are. Making it obvious like when you plan on like making certain investments, making obvious like, and that includes like both like capital outlays for like, if your business is like a CapEx heavy business with equipment requirements, making it obvious like when those are happening, make it obvious when you plan on hiring certain people in the organization, thinking through like, from my perspective, if you're raising money at a 10 million valuation, but your forecast only says, you plan on doing 2 million in revenue, like there's probably a disconnect between, being a venture backed business like that versus, versus what you're trying to accomplish on the revenue side. There's a whole bunch of stuff that, sort of goes into thinking through the model, but at a high level, making it like really clear what the assumptions are, making it really clear when you plan on hiring people. And then, not everybody knows how to do a 3-statement model, but it's very helpful to like understand, when cash is required in the business, when additional investment is required in the business, and thinking through those types of scenarios. Tim's really the expert on the model, so he can probably speak to it a little better than me.
Yeah, I mean, I think just in short, to Brendan's point, you're asking for cash. So then the question is, okay, well, when is that cash going to be spent? And then the next raise, and have you thought about like kind of the huge capital requirements of doing a venture-backed business? And does this actually provide you the runway? Because that's kind of the question. I'm raising 500,000. This will last me 12 months. Great. Show me the actual plan. That plan comes through in the forecast model. And then the other part of it is the unit economics, which I think we touched on last week a little bit. But I think that those are the two big categories that I really care about and look at.
Unit economics is for like customer acquisition or for the product that you're selling?
All of the above. Like, I don't know. Like, yeah, like if you're Netflix, like acquiring a user costs X amount because we're going to be advertising and we have a whole bunch of customer service people and like all of this crap. And then we have to like develop content and it's expensive here. And then we're going to be getting whatever, $10 or $12 or $15 or whatever it is a month. And we think they're going to last for this long. And this equation means that we're going to make money at the end of the day because it works. And nobody actually knows what the actual numbers will be, especially at this stage. But just showing like a semblance of understanding and thought into how this is going to shake out provides confidence to the buy side.
Or if you're already at revenue, like using demonstrated numbers that you've already achieved to like extrapolate that out, I think is also important. Like we've seen a couple companies that say, oh, our customer acquisition cost is $30 and they're forecasting it in the future to be like $5. It's like, well, there's a disconnect between that. And so you want to make sure that your model sort of makes sense in that respect. Not just for the investor, but like for your own sanity. Right. I think it's almost more important. It's really, yes, the investors might look at it or might use it as like the basis of some of their decision, but like at the end of the day, it's really internal, should be used more internally.
Yeah, excellent point, Brendan. If you're trying to build a great business, whether you're raising money or just building a great business, you kind of want to do the same exercise to make sure it's going to be great. Okay, use of proceeds forecast. That is basically what you're doing with the investor's money, correct?
Yeah, exactly. Tell us what you're doing with it and why you need the capital, and make it like really clear. Either that that doesn't have to be a separate line item in the VDR, but it could be in your investor presentation somewhere. But like I would make it really obvious so people don't have to look around for it.
Yeah,
I always like to see like okay, you're raising $1 million. Like where's that going, and make it really simple for the investor to see.
And it boils out of that forecast model, like how we were talking about, there's sort of two components. That first component being what you're planning on spending that money on, that's this. But just distilled out of an Excel document and put into like a readable thing for the average person to be able to figure out.
Okay, and then last thing you have on here is proposed investment documents.
Yeah.
USA. Remind us what a USA is for those of us that might have forgotten.
Unanimous shareholders agreement.
Okay. It's also a great country just south of here. Unanimous shareholders agreement. That's what all the shareholders will be signing to become, investors in the company. Subdoc. What does subdoc stand for?
Subscription document.
Okay.
So that's subdoc and term sheet depends. You probably want both, actually. So the term sheet outlines the terms of what the investment is. So it's like a 1-2 page summary of what the deal is. So let's say it's a convertible note, 6% interest, 20% discount, $5 million cap. All the other things that are associated with it. And then the subdoc is the 20 page proper lawyery document that nobody actually really reads. They just look for the terms anyways. So the term sheet alongside the subdoc is helpful. And then the USA is relevant if it's an equity investment, because you only need a USA if you have shareholders. And then if you're coming in as a shareholder, it means you're coming in as equity. Otherwise, the theory is that a VC will roll in and clean that thing up when they make $1 million or $2 million investment.
Yeah, guys, we get a lot of people participating that are still sort of trying to figure out the subdoc and term sheet and the structure of the round. So any thoughts on like where to start when you're trying to figure out like how should I structure my deal? What should I use as my template for a subdoc and a term sheet?
Yeah, I mean, it'll likely change from like the start of the raise to where you ultimately end up. But I think having it outlined, having a proposed like term sheet, something that you've thought about in advance is important. And then recognizing that like, you might have a lead investor who may want to negotiate certain key terms, but having it like the term sheet, I think is important to have like a simple 1 to 2 page document that outlines what you're planning on doing. And then it's like really easy for someone to see. Again, it's like the more friction you create for an investor, the harder it is, the more chances and likelihood that someone's going to say no. It's like if all of your stuff is disorganized and it's not summarized in like a simple fashion, then it's like I'm a busy person. It's going to take me too much time to like look at all of this. If it's nice and easy and like simplified, which a term sheet is supposed to be like a 1 to 2 page document, then I just have to go there and I know exactly what to look for. Here are all the terms of the deal. But recognizing that like, if you have someone who's going to cut a $300,000 check out of $1 million round, they might be the first person to negotiate the terms, and like those terms might change.
Yeah.
And you can communicate that to other investors, like, hey, I'm working with a lead investor, and this is the proposed terms, but we're in negotiation. It can be just as simple as that.
Yeah. Okay. And I want to mention two resources that entrepreneurs can check out. One is the NACO website that has a bunch of sample documents with actually like explainer documents. So that's not a bad place to go to look at samples, term sheets, and subscription documents for like an equity round or convertible note. They have safe notes on there, but I strongly encourage everyone to go to Y Combinator to look at the safe note documents. Y Combinator has a very robust set of documents for safe notes that I encourage everyone to use instead of the NACO. They're more up to date.
NACO safe note has an error in it that we discovered at the last
The
time.
NACO safe note has an error in it. And also Y Combinator has moved to what they call a post-money safe model for a few reasons. I think that's kind of like where the world is moving, and NACO hasn't updated their document yet. Shout out to NACO, make that update.
Just the things that were called safe, simple agreement for future equity. NACO is where there's a convertible. The convertible one is actually pretty good over there. And I think they have an equity template. And then Y Combinator is the one that has the more updated post-money safe agreement.
Yeah, so
Y Combinator as in Y, like the letter before Z, Combinator.
The safe agreement is like a simpler version of a convertible note. I think it technically is a debt instrument. But it has, anyways. It's kind of
it's like both debt and equity. It's a weird instrument.
It makes sense in certain situations, and now they've gotten a little more sophisticated where more and more investors are comfortable using safe notes. Okay, we're actually coming up on time here. So why don't your financial section here, let me just ask you this. You kind of got like basic stuff in here, like past financial statements, interim financials, and then you got budget for the rest of the year. Yeah, how is that different from the forecast in 1.2, line 2.3?
Yeah,
I mean,
it is.
Oh, go ahead, Tim. I think
it is the forecast model. I mean, some of this is like for a traditional company as well. So it kind of, whatever. But, the budget for the rest of the year is definitely just the forecast model, assuming that it's monthly. If the forecast model is like, we're in 2021, we're just going to skip ahead to 25, 26, and this is when we're going to be good. It's like, nah, we need a little bit more information as to what your game plan is for the near future here.
Yeah. And you likely want to have, like, it depends on who you're raising from, but many of the VCs want an annual budget set. For example, like AFI2 wants a annual budget by month in advance. And so having that prepared is a good exercise to go through, especially if your forecast model is on like an annual basis, breaking it down by month and understanding like how the cash is going to be spent, when people are going to be hired, when you plan on making marketing outlays or capital outlays. Like having that budget is sound. But if you already have it in your forecast model, you don't have to duplicate it here.
We got a question in the chat about valuation caps on a safe. It depends on the stage of the company. So the question is, in Canada, 6 million is a standard cap for a good idea in the space right now. And what are the thoughts? I think that, for an idea stage company, if there's been some work and there's like some semblance of team and like things are starting to formulate, then I think that's more of like a 1 to 2 million valuation. I think 5 to 6 in that range is more like we have a product, or like we're pretty late stage with the product and we're getting ready to go to market, or we have early market traction. And then like kind of the 10 million is we have traction. We've, proven out that this product is what people want and people are paying for it. And like, we're really excited to go to market. We're raising a few $1,000,000 here in order to really smash it. I think that's sort of then there's sort of like a blended range between all of those things, but that's sort of the way that I think about it. I don't know if you guys have the same or similar thought.
Yeah, I think that's probably fair.
I think that's roughly accurate. And, just to emphasize that it really does depend a lot, deal to deal, situation to situation, it's very unique. I think the applications we get, which are probably pretty typical of like an early stage, an early angel round, we see valuations ranging from 2 to 8 million. And yeah, people that are a little bit earlier in the runway are usually closer to 2, and people that kind of have some initial sales and things figured out are closer to 8, but there's everywhere in between.
Mhm.
Yeah.
Do we, just seeing the time, do we want to just like quickly rip through the headings and like high level what each of those sections are?
We can.
Or what were you thinking in terms of rounding this off?
Well, I was only going to get to financial and corporate documents today, and since corporate documents are boring, I wasn't really going to go into them, other than to say that you need them.
Yeah, that was pretty much it. Yeah.
Yeah, I think you need them. And then one thing again to sort of hammer home, it's like, so you have, let's say you've already started your round, or you've had a previous funding round, having all like the subscription agreements from prior funding rounds is not a bad exercise to have. And especially if you're in the midst of a round, putting them in there and then summarizing them. Again, if you're providing like a whole bunch of detail for all of this stuff, a lot of times it's really good to have like a little summary of the documents that you're putting in each one of these folders.
Especially like I've had an example in a past summit. This company had awesome traction. They had like 20 or 30 LOIs that were signed, all with different terms. I was like, this is great. I'm definitely not going to read all these documents because I have other things to do. Can you like give a summary as to like how these are, like how these work? Like, are any of these binding, or how, like, are they minimum or maximum contracts? Like, what's the price on them? Who are they? Like, give a nice little summary. And they're like, all of them, all these LOIs, all the information is in there. And lo and behold, they didn't raise money. So they had traction, but they couldn't communicate it properly, which was frustrating, but here we are.
Communication is probably the most important part of the whole process. So thanks for bringing that up.
Yeah, definitely. Like I said earlier, Zach, I think it's making it simple for the person on the other side. If you want their money, make it easy. Give them as many reasons to say yes as possible.
Yeah. Now, guys, I think I don't want us to go too much over time. I think we started a couple minutes late, but the things that are highlighted in yellow there, AR aging, AP aging, inventory detail, fixed asset register, is that something that all the startups are going to have, or is that like a special case situation?
It depends on the business. So if you're like a hardware company, like for example, like G2V, and you already have sales, and maybe you sold $500,000 worth of stuff, and you have $100,000 worth of accounts receivable on your balance sheet, I'd probably provide the AR aging as like a summary. You're going to see that on the balance sheet. It's going to say $100,000. Well, I want to know what that $100,000 is made up of. Like, who owes you that money?
This is basically details of what you're showing on the balance sheet.
Yeah, exactly. Yep. Like important details. You don't have to go into like every little nitty gritty detail, but like, if you're a SaaS company, I want to understand, like, and you have a deferred revenue line on your balance sheet. Like, I kind of want to understand what's making up that amount. Or if there's like a weird, if you have a big accounts receivable, like you're owed a whole bunch of money, I don't know, shred, for example, like just tell us what that is. Yeah. And make it simple. Like I said, the goal is to just make it easy for people to understand.
Okay. On the corporate documents, do you guys have anything to share with people? I mean, I think the list of what's required is great. I don't actually personally think there's a whole lot to talk about there, other than, these are kind of standard corporate documents that every company needs. Yeah. And the investors just want to make sure they're there and there's nothing out of order with them. Anything to add?
Yeah. I mean, a quick secret is that an investor isn't going to actually look at them. They're just going to look to make sure that they're there. So the whole point is to ideally actually be a company. They'll audit it, like they'll do a quick 1 or 2, open them, make sure that it actually is what it is. But broadly speaking, that's the section of just like, all right, do they have their shit together, and are they actually a real thing, or is this just like a little quick fraud scheme to pick up my $100,000?
Yeah, and your lawyer will be able to provide all of these documents.
Yeah.
Okay, guys, we're over time. I think I want to end it here, but you mentioned something to me at the beginning where you were looking at potentially doing some office hours. Do you want to share anything with that, or are we gonna be able to follow up with anybody about if they wanted to connect with Tim and Brendan and your friends? That happening?
Yeah, I think over the next couple of weeks, we're looking at having some office hours along with our partners at Opus. And Opus does some consulting work around like how to frame your story and how to frame your pitch better. And we can help on sort of the financial side. And so we're going to have office hours along with Opus over the coming couple weeks. And I think, Zach, you can probably put this out to the group. And
Yeah.
if people want to chat in like more depth, we can help answer specific questions related to your raise or your particular situation.
All right, let's Tim. Any final words for us before we close it?
No, it was awesome. Looking forward to doing this again.
Can they get a copy of this template or a version of it?
Yeah, maybe we should put up like a blog post or something on Startup TNT's website, and then people can download it from there.
Yeah, so I think we want to share the template with everybody and share some information about office hours if you guys want to spend a little more time talking to Tim and Brendan and their friends one-on-one. So thanks everybody for joining us today. Enjoy the rest of your Tuesday afternoon. Join us on Thursday. Piss Nights are back. TNT Happy Hour is on. And get your applications in for the Investment Summit by Monday. Thanks, everybody.
Let's do it.
Bye, everyone.